Hi, everyone. Now, having dealt with all these group entities, right? Be it a subsidiary, be it a joint venture, be it an investment in associate, and be it a joint operation for that matter. What we want to do now is talk about that while you have these relationships with such interest in these other entities, there are disclosure requirements of the group. There are disclosure requirements which pertain to the group as well, right? It's a small standard. It's a disclosure standard, and we would not be taking a lot of time to cover it any which ways. But Ind AS 112 basically caters to the requirement of disclosure of interest in other entities. All right. So primarily, the standard would talk about disclosures as they relate to separate financial statements as well as to the group financial statements or consolidated financial statements, right? Nothing has been tested in the examination, from this particular examination, and it's a conceptual paper. I think it has a lot to do with the practical relevance when you look at an actual preparation of the group financial statements or separate financial statements. What kind of disclosure requirements are there? But from an examination standpoint, not a very key area so far. All right. So when you look at the standard, of course, you talk about helping shareholders or the users of the financial statements, know the nature and the risks associated with its interest in other entities and the effects of those interests on the balance sheet or the position on the financial performance and also the cash flow. So just to give a in an overall perspective, right? So there's a lot of relationship that this standard bears with Ind AS 1 that we covered, right, which was on the presentation of financial statements, and specifically the disclosure requirements are now not for an entity but for the group, right, and the separate financial statements of the parent company, right? So this would be applicable to all the entities which have any interest, be it in a subsidiary or a joint arrangement or an associate, or even for that matter, unconsolidated structured entities, right? So these are the specific areas that we have spent considerable time talking about. What could be a subsidiary, what could be a joint arrangement, what could be an investment in associate, and so on and so forth, right? It would not apply to any post-employment benefit plans, right? Any interest held by entity, which does not have, let's say, a joint control or a joint arrangement. All right. In the separate financial statements for Ind AS 27, and for any investments which are covered through Ind AS 109, which is basically an investment in shares of another entity that is accounted for under financial instruments, right? For that, the disclosure requirements are covered by Ind AS 107 precisely. Okay, so when you look at the disclosure requirements for that entity, for the investor in its separate financial statements, so what are all those disclosures that we need to kind of do? Disclosures will be as per the applicable Ind AS, as all the other Ind AS would apply. But in case the entity does not prepare, consolidated financial statements and only prepares separate financial statements, maybe there are exemptions available, right? So there is a choice to not do that. Then it has to disclose that the fact that the financial statements are indeed separate financial statements. It has to disclose about the exemption. And then you're also talking about the name and place of the business of the entity whose financial statements, consolidated financial statements, are produced public use, and where these are obtainable, right? So they're also being disclosed in terms of where from can you procure the group financial statements. So you talk about those intermediate or the eventual parents, you have to disclose that part as well. Also need to be disclosing, for example, list of significant investment in the group entities with respect to the name, principal, place or proportion of ownership interest, and the method used for accounting as far as all these investments are concerned, right? The parent would prepare its separate financial statements as its only financial statement, like it would happen in case of an investment entity, right? So it has to give that fact and the disclosures as per the Ind AS 112, right? And any other entities, they also need to do it, and give an information about the fact that the financial statements are indeed separate financial statements, and all the list of significant investment in the group entities and the method used for accounting. Okay, that's a very brief, precise disclosure requirement that we have from separate financial entities, financial statements perspective, right? As expected, the disclosures as far as the group financial statements are concerned are a bit more comprehensive. So that's what it is basically going to be. So you talk about all the information, for example, relating to significant judgment and assumptions, information about the interest, as far as the investment entity is concerned, the status thereof, interest in subsidiaries, interest in any consolidated, unconsolidated subsidiaries, for example, by investment entities, any interest in joint arrangements or unconsolidated structured entities, and also summary financial information of all such entities, right? So it's quite a detailed disclosure requirement that we have got at a group level, right? So these would include, and not just confined to, significant judgments and assumptions that the entity has made, and the information about the interest in the different entities, for example, right? Similarly, for investment entity status, if there is a change in the status or the reason thereof, and the impact of those on the financial statements, as we have discussed the investment entities from the coverage of the group entities there, right? Similarly, when you look at investment in subsidiaries, that helps them, that would the information that is required to be provided would be the information that helps the users to understand the group composition, the NCI for that matter, right? And the cash flows from the subsidiary and the place of business and the proportion of ownership interests and the P&L allocated, and similarly the value of the NCI, and also financial information about the subsidiary in broader, right? Similarly, it would go further, any information that would be relevant for the users to understand that any extent or nature of restrictions on the use of the assets or settlement of liabilities of the group, etc., they're all required to be given, right? Whether it's a restriction on the transfer of the assets or any guarantees, etc., being made, the nature and extent of the protective rights, right, that may prohibit or that may restrict the entity's rights, and finally, the value of the assets and liabilities of the group on which such restrictions apply, right? Likewise, you talk about the risk parameters, where you start talking about nature of and changes in the risks associated with the interest in the entities, including terms of the contractual arrangements, events and circumstances that could actually expose to the risk, provide any financial information and support with respect to that type and amount of support or the reasons for that matter. And similarly, for any unconsolidated structured entities, the reason of support and the intention of support to assist as well, right? It's pretty much of a listing of disclosures rather than really going in detail as per the expectation of the examination. We don't want to spend a lot of time on that, again, emphasizing, right? Similarly, you talk about the consequences of changes in the ownership interest. It could be a control to control scenario where you look at what is the impact of the changes in the equity, and in case there is a loss of control, right, from a control to a non-control situation, then you talk about the gain and loss, as far as the profit or loss statement of profit or loss is concerned, and also with respect to the fair value of the investment. In case the financial statement of subsidiary of a different date, then the end of the reporting date of that subsidiary and the reason that you're using a different date there. That also needs to be clarified, right? Similarly, for any unconsolidated subsidiaries, for example, by those investment entities, the name, the principal place, the proportion of ownership interest, the financial statements of the subsidiaries and the parent, and the restriction, for example, with respect to the transfer of funds or repayment of loans, and also the current commitments or intentions to provide the support or assistance need to be provided. Finally, we talk about for each unconsolidated subsidiary, any financial support provided, then the type and amount and the reason of that has to be, explained. And also, in case it was, done earlier with respect to any previously unconsolidated structured entity, and the support caused in the or resulted into the controlling the entity, then the reason of the support has to be given, the terms of contractual arrangement that require to provide financial support, and the events and circumstances that could expose to the risk for this entity, right? At a group level, you talk about these joint arrangements and investment in associates. All those investments that are made for the material joint arrangements associate, the nature and effect and financial effect with respect to the name, the relationship, the place of business, proportion of ownership. So you would always see, let's say, these aspects of principal, place of business, or proportion of ownerships. Also the summarized financial information, and also importantly, whether you are measuring the investment using, what method you're using for the purposes of measuring the investment, right? And then you talk about all the financial information related to those joint ventures and associates, as the case may be, right? Further, with respect to the material, joint ventures, any significant restrictions with respect to the transfer of funds or repayment of loans and advances. Now, this would be common again, and you understand that when you look at all these restrictions, these would impact the cash flows position, right? So you need to be carefully assessing that, and that's where the disclosure would be, for example, relevant there, right? Similarly, the financial statements used in application of equity method, in case there are different dates, then the reporting period end date and the reason of the different date has to be shown as well. And any unrecognized share of losses, need to be also disclosed separately. Similarly, for the risks associated, any commitments or contingent liabilities, they also need to be separately disclosed, right? Finally, with respect to the the interest in unconsolidated structured entities, the nature and extent and exposure of the risk information, so that the users can evaluate the nature of and the changes in the risk, the qualitative and quantitative information about these entities, in case there are sponsored entities, right? How it has been determined which entities are to be sponsored, the income from those, and the carrying value of all those transfers. This has to be done in a tabular format, right? And you just continue with that part where you say that the carrying value of the assets and liabilities of those entities recognized in the balance sheet and other financial statements, right? You also talk about the maximum loss, etc., represented, and how do the above loss comes to the picture. Similarly, any financial support, etc., has to be disclosed, right? And then we talk about summarized financial information for all these entities, in case there are subsidiaries with NCIs that are material, then what is the amount of dividend paid, financial information about all the elements before the elimination. Similarly, for the joint ventures and associates, the dividend received and all the relevant financial information. The same goes with the joint ventures with respect to the cash and cash equivalent, any liabilities, current liabilities, for example, and the non-current financial liabilities, any amount of depreciation, etc. Similarly, interest income or income tax expenses have to be disclosed. And just in case an entity is using equity method as applicable to joint ventures and investment in associates, then the Ind AS financial statements should be adjusted and the reconciliation has to be shown as well, right? A very brief standard, more of a listing of information. I think the key points that you want to pick up is the place of business. You talk about, of course, any specific restrictions that you want to remember here, right? With respect to the cash flows, etc., and any financial support information. That is something that you probably want to remember as a part of the coverage of these disclosures broadly. All right. That's it from my side on this case. Thank you very much.